Friday, April 10th. Welcome to the seventh day of the recession. So, welcome aboard. Um, we have scenarios where, as a trusted tax advisor, we have clients who are calling and asking us questions about some of the new loan programs that the SBA and certain banks, I wouldn't say in cahoots, but in coordination with the SBA, want to consider to support small and large businesses. So, the long story short of what's out there right now is that the government generally is not doing the public any favors, because you've got, in one case, you've got this economic disaster relief loan, and for a small S corporation where a lot of businesses are just sole proprietorships, if you will, but they elect S corp status for certain tax benefits. So you have these companies that have maybe a one-person payroll. Maybe they just take enough payroll to either fund a 401k or to do it just to get off the IRS's crosshairs by taking a salary because they perform more than 95% of the services and they're 100% owners. So great. So what's that going to do? What that's going to do is you have a scenario where the IRS the SBA is saying, well, oh, we're going to give $10,000 checks and wire them into bank accounts within 3 business days. Well, if anybody read the damn law at the time, the $10,000 actually alludes to the fact that you're looking at $1,000 per employee. So if you have 11 employees, then they're probably right.
So I think they did change the law, though.
And they did change it. So what now is happening? You've seen different incarnations of that SBA loan application. You see updates for this paycheck payroll protection program, whatever they want to call it, PPP, like I just did an hour ago. It's the same thing. I mean, you basically have a scenario where you want to try to help the small business or the medium-sized business or the large business with payroll. You want them to spend the proceeds of the loan on payroll within 8 weeks for one loan, and for a certain amount of scenarios for another loan. I don't know. I just have pretty good credit. I went out and got a $15,000 interest-free credit card for 18 months and solved the problem in a 10-minute phone call.
9.
Oh, it was a 9-minute phone call?
Yeah.
Oh, you timed it. It was
okay,
what,
I timed it,
9:45?
Yes.
Okay, so in under 10 minutes, and it probably takes under 10 minutes to fill out the basic intake form for the SBA loan or the PPP loan, then a banker will call you back on the PPP one, and then you wait until the SBA gets back to you for more information, which may be next week or next month or next year, we don't know. So you got until June 30th to apply for one of the types of programs, which is the PPP. You've got September 30th to apply for another program, which is the EIDL. And I don't even know anybody who's gotten approved yet.
So do you think that this was, bought them the last week so the stock market could go up, secure the bonuses? Everyone thinks they're going to get some free money. That's what people are calling you. They think there's just going to be a handout?
Well, let me correct you.
Yeah,
The
okay.
first $2 trillion basically gave. Remember, you've got to take care of Wall Street and the bankers first. You've got to pay those bonuses. It's got to be $30-40 billion right there. You've got to take care of the bankers now. All right, so they paid that. So then all of a sudden in February, before all this stuff happened, with all this economy change with the COVID thing, not sure what all that is, but there's obviously a state of the state, and we have all these protocols now, and I hope everybody stays safe and all that. But you've got a scenario where Wall Street had to take care of their own, okay? Then you take care of the immigrants and poor people. Everybody watched The Big Short. Everybody watched all of The Big Short. And if you haven't watched The Big Short,
it's happening again.
And it's happening again. It's laying out right in front of your very eyes, and because of, whether it's thanks to or the detriment of social media, I'm not a big fan of it, you increase the fear factor, you increase the frightening factor, you increase the accelerated need to know factor. I'm not knocking anything, I'm just observing from what I'm seeing, and you're causing what I think is a lot of panic, whether it's bona fide true or not from a medical front, I'm not sure, but you're causing, in certain areas of all this stuff, obviously the COVID thing to the contrary, to the side, a large overreaction where you're now quarantining the United States as a whole to do its business. And whether that's an overreaction or not remains to be seen. I have my own opinion, but look what you're causing. It's what it is.
Yeah. But I don't think there's ever been a bluept for what we're seeing now. As of shutting down everything, that didn't happen in the Depression.
Unprecedented. This is absolutely unprecedented, and it's going to take.
It's a suppression where they're doing it to the right.
I mean, we've been in a
Yeah.
recession since 2018. Because
Yes.
you can't use the R word, and you can't use the R word in an election year. So
Yeah.
what's the matter with everybody? So,
And no one would have listened to you anyway in
I know
18.
we already got our clients
Yeah.
mostly in all cash anyway. So we're looking good in this. The reason why we did this is because we can see what's going on outside. We watch what's going on outside. We listen
Seeing
to our
around
clients.
corners. Yeah, that's what a CFO does, right? Foretells the future.
In-house accountant records history. Very important role,
Yeah.
but you have both. I just don't watch any videos that much, and I don't watch see who's in rehab. So I want to see what's going on there in with my clients in the real estate industry, with my entrepreneurial clients in the economic industry.
And if anybody catches any of these references, leave a reply on the comments. We got to see who's catching them. I mean, we got to see who's.
These references are actually critical
Yeah.
because we're going into the same scenario where, for the most part, the United States people have been in denial of this
And getting enabled. Yeah.
and they're numb right now. In a lot of cases, what I do as a trusted advisor, being serious for a second, and yes, I've been ranting a little bit, and my apologies, I normally don't rant, is I choose to apply for money and credit when I don't need it. So what's happening now is you've got all this fuss and media attraction toward people thinking they're getting free money that might be forgivable.
Yeah, like a year and a half ago, we were frantically trying to get credit a year and a half ago, like how people are now. We were doing this a year and a half ago.
And that's what with our clients, we do this. We spot tops. We know where the tops are in the markets. We've got, to be honest, I think in certain parts of the country, we're at the top of the real estate market. We're at the top. You can't go much higher on prices. Real wages haven't gone up. The houses become debt, not assets. Very clear, very obvious. The markers are there. They are coming, and more markers are coming, but the markers have been there for something like this, and all of a sudden it took something where the economy was going reasonably well. I mean, most industries, for the most part, were going reasonably well. You have your cyclical industries, and we get it. But then all of a sudden, this thing, whatever this thing is now, comes up, and all of a sudden, the world is panicking. And for the medical side, I get that. I understand. I mean, I feel terrible for people who have lost lives, and you've got a big flu going around. It's been going around for months, and you just do the best we can to take care of ourselves and be safe for our families.
Let me ask you this for the people watching this out there. Okay, so now what do we do? I'm a business owner. How do I get through this next Q2? What should I be doing? What is the, from a credit side, do you have any things that you're offering that we could tell people from this video if they want to schedule some strategy sessions on? Now that we know this information, you've been doing this for 38 years now. What do we do? We don't. Who do we listen to? What is my? Do we shut down? Do we keep employees? Do we expand? Do you have anything programs that you could help us if we have questions?
Well, we don't necessarily A, have a crystal ball, and B, there's not a canned formula for every client. We have to understand and be understood. So what we've started doing, even at the beginning of this year, and oddly enough, it's presenting itself even more now because there's a perception of a sense of urgency, whether that's brought on by the media or social media or other things, that something is going on outside. But the way we approach that is we don't manage out of fear. I take all this as an opportunity. So the opportunity that our firm has chosen to do is we chosen to stay in touch more and even more deeper with our entrepreneurial business clients, no matter what size. And we offer not necessarily a strategy session, but let's identify the 5 pain points of your business, which some of them have been accelerating because of this COVID scenario. So let's address those. Let's do a combination of an anxiety reduction and a solutions provide. And let's monetize those issues so that they don't affect you as deep as they should. And if you require pivots in your industry, the time to pivot actually was 6 months ago. So we pivoted 6 months ago on a lot of things, or even longer ago. We pivoted our client base, we pivoted the types of clients that we knew would be affected in this type of market, and we're able to address in a proactive manner these issues. Excuse me. We've also looked at how to provide solutions and to reduce anxiety at the same time. And we offer ways to A, monetize that increment, and number two, put together a plan so that, let's say we do these kind of sessions on a monthly or quarterly basis. It's important to the client not only because federal and California tax laws are supporting these kind of things in the form of a tax deduction. We're not preparing a tax return for this purpose, so the strict prepreration of a tax return, the IRS is saying.
However, we might look into something that I would venture to say over 75% people don't even know that amending a past tax return even exists. I don't think many people even know that, let alone the new rule changes. So maybe potentially if you invest some money in some of this knowledge, like for me, for example, let's say I spend $500 or $1,000 or whatever the number is for a strategy session, but within 5 minutes you look at something, you can get me back 15, 20 grand. I mean, we're doing that all the time for people. I just don't think they understand that that's out there.
With a new client retention, the first thing we look at is what happened in the past. We look at the statute of limitations, generally 3 years from the date of file, to say, are there opportunities for correcting a return that might have not been either done correctly, or tax treatment wasn't done correctly, or maybe there's some pieces that were missing, or maybe some deductions were left off the table. And a lot of the new clients that we do get will typically say to us, the professional that prepared that last tax return wasn't well informed, maybe you didn't get all the data, maybe it was just rushing the return out because something had to happen. We don't rush a tax return out until we completely understand what it's for. A tax return is an annual sales pitch to the government, but it's a representation and a snapshot used as a tool for some things. Maybe people want to look for refinancing the existing mortgages on rental or principal real estate. Maybe they're looking to get a line of credit from the bank. Maybe they need to present something for FAFSA for a children's financial aid scenario. So it's not just, I got to get my return out because an underwriter wants to refinance my mortgage and blah, 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 blah. Well, we had a lot of situations last year, I can account for 5 or 6 of them, where if they rushed the return out just to rush it out, they would not have enough income to qualify for the refinance, and they would look like a fool, and I would have looked like an idiot if I didn't ask the right questions. So in those scenarios, we held the return back. We got the banks to tip their hands on how much information they need and what kind of income they need, and it helped us understand what we needed to do. And that's all we're doing. We're not making up numbers. We're not doing anything like that. But we also want to understand, do we fit into what the underwriter's guidelines are? So I'd rather fit into or not fit into the guidelines and say, what are the pros and cons of what we do? So plenty of ways to skin the cat. I know I'm going off on a tangent. This is something where you've heard it first on the WAF Network.